Hey, everybody. Welcome to another episode of the Under the Hood podcast hosted by Stallion Capital. Today on the show, we have Larry Sprung, who is the founder of Mitlin Financial and the host of the Mitlin Money Mindset podcast. He is also the best-selling author of Financial Planning Made Personal. Larry, how are you doing today?
I'm great. Thanks, Tim. Thanks for having me. I appreciate it.
Of course. Thanks for coming on the show. We're excited to hear a bit more about you. And we always like to start the show with just that, hearing a bit more about your story and your firm. So tell us about your kind of foray into the financial industry and a bit more about your firm.
Yeah. So, as you mentioned, I'm a best-selling author of Financial Planning Made Personal, and I write about my, entree into the business in the book. Essentially, growing up, watching my family, my mom was ill at a very young age in her 30s. And, I was about 12 or 13, and I saw my dad, keeping a lot of balls in the air, keeping the family afloat, keeping his main job as a teacher. And then he also had some side gigs before they were side gigs. And watching him with those trials and tribulations. And, the one thing that he did not have that I noticed was he did not have a financial advisor. And not that would have mitigated any of the health situations that my mom had or her subsequent passing, but I felt like he would have had some assistance, some help, some guidance. And, as I was reflecting on that, as I entered high school and college, et cetera, it was just something that came to me that I was very interested about finance. I was very interested about helping people. As I learned more, I was like, you know what, this doesn't necessarily have to be only helping families that are having trials and tribulations like my dad was, which would be great. But it could also be helping families reach and strive towards their goals and happy occasions like sending kids to college, buying a retirement home or a second home or retiring, things of that nature. So it became something that I became very passionate about and led me down the path and, started out in the profession and then several years into it, ended up founding my own firm in 2004. And, this year in 2024, we'll be celebrating our 20th anniversary in business and helping families. And we pride ourselves on the fact that, to date, we're working in some cases with third and fourth generations of some families that we started out with, 15 and 20 years ago. So it's a very rewarding career and profession. And if people out there listening are considering entering it, I highly recommend it. Talk to people like myself and others in the profession that are really passionate about it and really learn about it. And I think you might be as enamored with the profession as I have been even to today.
I got you. So started in 2004 and you're about to hit 20 years. What are some of the things that you feel you've learned about relationships with people along the way? Because that's what you're doing, right? You're really helping people. And so talk to us a little bit about that.
Listen, life, it doesn't matter about this profession. I truly believe, and I'm now currently imparting it upon my kids who are 17 and 20 respectively, that life is about relationships, right? I use the term all the time that network equals net worth. Your network can basically get you or will help you achieve whatever you want to achieve, whatever that may be. It could be, a change of a job. It could be new business opportunities. It could be just support, guidance, anything and everything can get there. So relationships are key to everything. And I think the thing that we pride ourselves on is one of our core values, which is client, which we call them here families we serve. So families we serve, it just doesn't work in our core values. So we use the word client equals family equals team. And what I mean by that is, our clients, our family, in addition to our extended family, our team, our stakeholders that are serving those clients each and every day, our family. And I think that is so vitally important. And I think a lot of that resonates in everything that we do and all those relationships that we cultivate, make, and maintain.
I love that. Talk to us a little bit about how this has changed in the past 20 years. The understanding the current market, where you go to get your information and where you go to find kind of new trending or kind of optimized or top-notch financial strategies. Like what sources are you going to get that information about the market so that you maintain your expertise and can make sure you help your clients through every situation?
Well, I mean, that's a great question, and it certainly has changed quite a bit. When I first started in this profession and was working for a large, more institutional type firm, I guess you could say, at that time in the late 90s, basically the value proposition was, we have the information, you don't, right? It was, we have the information, you, the general public, don't. So if you want that information, pay us for that. And I think the internet and technology has leveled the playing field with regards to, the access to the information. Now, interpreting that information is a totally different thing. I don't think every average, person has the ability to interpret it, but I think we all have access to it. So to some degree, for our firm, we rely on professional money managers. We have a portfolio strategy team that we heavily rely on for, to your point and your question, for that information, for that insight, for that guidance, that are going and combing the vast resources that are out there and basically compiling all that information into very easily and digestible information for us. We're recording this on a Monday. Every Monday, we have a call with that team called Macro Monday, and they give us, right off the bat about 6 or 7, things or points, client talking points, family talking points for the week. Things that we should be aware of that either happened in the past week or are expected to happen in the coming week. So we have a team of professionals that are doing that. So we're truly focusing. What we're doing here locally in our office is truly focusing on that relationship aspect of things and utilizing the true professionals that we have, the PhDs and the portfolio strategists, the CFAs, et cetera, that are combing the universe of information and basically, breaking it down to digestible pieces that we can understand, and more importantly, that we can share with the families we serve to make them better informed.
I gotcha. Yeah, that makes a lot of sense, especially when you were speaking to your values and when you were speaking about the importance of relationships in life. You do sound like a very relational guy, and doing both or having somebody doing both might be a little complicated when you're pouring into relationships so much. So having that expert who can help kind of break it down into those 6 to 7 points that then you can focus on relationships and focus on showing up for people, that makes a lot of sense to me. I am curious, though, when it comes to what factors you see people really paying attention to in today's market. What are you finding that clients think are important? Is that the same as what you think is important? And what's your high-level strategy to kind of address that gap, if any? And if there's not a gap, the factors.
That's a great question. And to your point first about the last question, right? One of our core values is know your expertise and collaborate when needed. We want to know what we know really well, and then collaborate, whether it's people internally or externally, when needed. So, going back to the next point, in terms of, what our families want, I think at the end of the day, the majority, if not all the families we work with, really empower us to make a lot of those decisions on their behalf. What they're really concerned with is not really, to use the car analogy, they're not really concerned with what's under the hood, what is actually in the engine, what's making up the engine and how that works. And, the analogy there would be the actual underlying tactical strategies, the investments, the actual stocks, bonds, alternatives, whatever they may be. They're less concerned with that and more concerned with, how are those things facilitating or allowing me to live the lifestyle I'm living today? And how is it going to let me or facilitate me reaching towards my goals in the future or retirement, whatever those may be? That's really what they're concerned with. And when there's market fluctuations like we saw maybe in 2022, it wasn't, hey, I saw, XYZ stock go down. It was, how is this going to affect my life and my future? That's really where the concern lies. So what we do and how we address that is we are very planning driven. And as my book is titled Financial Planning Made Personal, financial planning is extremely personal. How much somebody needs in retirement is very personal to their situation and what their needs and goals and objectives are. So we spend that relationship time with the family, learn as much as we possibly can about them and those goals, and then also figure out to some degree what their risk profile is, and then build an allocation that's going to facilitate or build that engine that's going to facilitate them being able to potentially execute those goals that they're looking to achieve. And, it's far more of an art than a science. If it was as easy as being a science where you put in a mathematical formula, I don't know that we'd be in business because we'd have robots and AI that would be able to do that. But it's more of an art, and even that risk profile, right? We always tell families there are usually a couple of ways to tell what their risk profile is. One is, you could do some kind of scoring mechanism where you give them a quiz and it spits out a number, and that's good to a degree just for a baseline. But really, the telltale is when you see market volatility, are they calling us? Are they feeling nervous or scared, and maybe rightfully so? And that's really the second component, and having those conversations and digging down as to, why they feel that way and maybe making tweaks. So it's a multifaceted approach, but again, I don't think that they're really concerned about the specifics. They're more concerned about that, overarching plan and goals and what they're looking to achieve more than anything else.
Yeah, no, that makes a lot of sense because money is a tool, and it's a tool to enjoy the things that are good in life. And so very few people are, when it comes down to it, worried about just raking up more dollars. It's really, how is this going to facilitate what I'm trying to do? And so some of the things you mentioned retirement. I imagine there's some family involvement there, some travel in there. And so when you're talking to clients and you're building out that portfolio allocation and you're judging that risk, what is that conversation typically like? Is it like an hour-long discovery? Is it a process that happens over 3 to 6 months? Do you have people... Actually, let's just stop there. I'll let you answer that question before I jump to next.
All of the above, really. It's an iterative approach. And what I mean by all of the above is, right, we initially determine or, work with them to come up with what that risk profile looks like, right? But over time, that can and will change, and it's going to change about, on a number of factors. It could change based upon market conditions, market environment. It could change based upon their life circumstances, whether that be income going up, income going down. It could change based upon them getting closer to a time where they are looking to retire, slow down, or even stop. So it's not a once and done type of conversation. It's something that happens initially in depth and then continually throughout the relationship. It's something that you have to continuously approach again and again, just to make sure that, everybody is on the same page and there's a level of transparency that there's still that same comfort level, or if there was a change made, that change is still satisfying what their goals and objectives are. And I'll share a quick story. Many years ago, I had a family, in the early 2000s when things were rocking and rolling with regard to the markets. You could basically throw a dart and things were going really well. He wanted to be, the husband wanted to be more aggressive. He said, I see the markets are going up, my portfolio not as fast. And I said, well, you said you were moderate. Now you're talking about being aggressive. So I kind of met him in the middle. I said, let's move 50% of the portfolio more aggressive and let's leave 50% of the portfolio the way it is. And the next month was not a great month. I think the general markets were down like 1 or 2%, et cetera. He comes in with his statement, says, oh my gosh, he goes, that half that we moved, it was down X number of dollars. And he wasn't looking at the percentage. He was looking at the dollars. And it was a rather significant account. And I was like, well, that equates to like 1.5%. And I said, it's 1 month. Who knows what's going to happen over the next 6 or 12? The expectation would be that, things would start moving in the right direction. And he's like, no, we got to change it back. So, you could say your risk tolerance is whatever it is. And again, it's circumstantial sometimes to the environment around us. And, I think that's a good example of why you can't just set it and forget it. It's got to be an ongoing conversation.
That is a fantastic example, especially in such a short time frame, right? Like it was month to month. He was looking to change his portfolio and then change it back because he got caught up in the emotion of the market, if you will. It's like, I want to catch the rising tide. So no, I appreciate that example. And so specifically when you're talking about aggressive, moderate, and maybe a conservative portfolio, what do those allocations look like for you? Are you doing primarily like equities or bonds? Is that the majority of it? Do you throw some alts in there? Kind of talk to us a little bit about a portfolio built for income, let's say.
Depends on how the portfolio is built. And, to your point about like readdressing or looking at things, right? You brought up an income portfolio. So that's something that we have the luxury at the moment that we can actually potentially build, right? For the last 10 plus years prior to last year, it was very difficult to do that because, real interest rates were pretty much zero. So it made it a little bit more challenging. So I think many of our families probably had more equity exposure than they normally would have because of the interest rate environment that we're in. But today, basically we predominantly use ETFs and individual securities, whether those be stocks or bonds, to build our portfolios. We'll build an allocation in line to what the family's needs, goals, wants are, and utilizing those tools. And we use a very systematic approach of, making sure that we have a very broad diversification across, virtually all asset classes. And typically that will be done through ETFs and indexing. And then we'll layer on individual securities on top of that where we're willing to take on a little bit more risk. And then, for some of our higher net worth families, we will also add, some alternative strategies in there, typically with individual portfolio managers and portfolio strategies. I think that adds another level and layer of, number one, complexity to portfolios, which sometimes complexity is good, sometimes it's bad. But that's why I think it's really set for a specific net worth investor. And we're very careful and mindful that we don't want to, because many of these strategies, are locking up funds for longer periods of time, not as liquid, not income generation tools, but more of a growth accelerator, non-correlated asset, if you will. So we will add some alternatives into those strategies and structures.
Okay. Talk to us a little bit about when it's good to have a portfolio be more complex versus less complex. You kind of had the net worth indicator there, but are there other factors other than net worth that can determine, hey, let's make this a bit more complex for your goals, or let's simplify it?
I think some of that depends on the family, right? So I'll give you a real live example. Actually, they were in here today. We had a family that, they did very well for themselves. Mom passed away about a year or so ago, and they inherited 1/3 of her assets. And they were pretty decent net worth, and their assets were allocated in a great way. We've been working with them for a while, but they came to us, and I think this is to your point because it wasn't net worth driven. They said, you know what, we want to take like 5% of our assets, and put it somewhere that is not like anything we have already, not in stocks, not in bonds, nothing like we have. And we're willing to take on that risk. And if it goes to zero, not going to affect our lives, but we want to give ourselves this opportunity. So what we did was we carved out a portion of their Roth IRA because we felt like that would be a great place to do it, because if it does take off and has huge success, there won't be any taxes or tax implications on that money. And we carved out 5% of their portfolio, their total portfolio, and placed this asset into their Roth IRA. And we're using an alternative strategy for that. So I think to some degree, some of it's net worth driven. Some of that is risk appetite driven by the family. And some of that is, people have questions about these alternative and non-correlated assets. And we want to be able to have those conversations. But at the same time, we have to balance that out with being mindful that we don't want a large percentage of somebody's net worth tied up into something that may not be easily made liquid for them in a short period of time. And we're very transparent in making sure that we're on the same page as far as what this money's for, where it's allocated, what the expectation is on the hold, and what their expectation is on the exit.
Yeah, no, that makes a lot of sense. And liquidity is important because you don't want to get your money tied up and then not be able to live the life that you want to live. But also some of those illiquid investments, depending on the type of investment you're doing, can have a return premium, if you will. So both are very important to consider. And so we've touched on a little bit how it's dependent on the family. Like some people might just have an appetite for alternatives, some might not. And we also talked a little bit to a portfolio geared towards income. Now I kind of want to dive just briefly into a portfolio geared towards accumulation that's not on the alternative side. Is it more picking the individual stocks and hoping for exponential growth there? Or is it just higher growth indexes? Talk to us a little bit about that.
Yeah, so for us, we basically will use, very similarly throughout the risk spectrum, we use a lot of the fundamental same working parts, if you will, because we believe that, regardless of whether you're conservative, moderate, aggressive, whatever you want to term it, you still need this fundamental diversification and allocation. And then it's just a matter of how you build it. If you think about it, I feel like I'm using a lot of analogies here, but, think about it like building a house, right? You're not going to build a house upside down where you're going to have the vast majority of your risky assets on the foundation and then have your, more fundamental pieces at the tip of the pyramid, if you will, or the top of the house, right? So we build that foundation in a very similar fashion, broad-based, diversified, so it can support the rest of the home. And then we'll add in some additional, maybe unique investments or maybe some additional growth accelerators in that portfolio, maybe some more concentrated type portfolios. Like we have some portfolios that are growth oriented where they basically allocate to 50 different securities. Those are changed, and evaluated on a regular basis. So that's where we'll get the growth component from it, layering it on top of the fundamental. But we still think that, everybody should have that foundational approach. And then it's just a matter of, well, how do we allocate layers 2, 3, and 4 to make it more growth oriented than the person who's on the income generation side of the risk profile?
Ah, I see. That makes a lot of sense. So that foundation is always very, very similar. But then layers 2, 3, and 4 of the house, as you're building up, that changes of like, hey, we can either put you in these 50 securities, which are really growth oriented, and we have our ways of analyzing these and keeping this list up to date, the professionals and experts we talked about earlier who specialize in that, or kind of more on the income generation side, we'll gear the portfolio towards that, if that's more what you desire. Is that accurate?
Yeah, agreed. Yeah. That's the way we fundamentally will look at those types of portfolios. So they are similar, but different at the same time.
Okay. Yeah. No, that makes a lot of sense. And so is there anything you feel like we missed when it comes to risk management that you want to touch on, or are you good to jump into alternatives right now?
I think I'm good. I think that, again, financial planning is personal, risk is personal. And I don't want people to think that, if you take a quiz or you take like an online profile, that shouldn't be the end all be all. It's an ongoing conversation. That's the takeaway that I think people should take away from our discussion around that for sure.
I gotcha. So it seems like we got a good picture of risk, kind of a good picture of that portfolio construction, and also some of those key factors to pay attention to in the market and how that is really a personal endeavor. And it varies from person to person and how you have those conversations. But I do want to jump into a little bit more about alts when it comes to those high net worth individuals. How are you going about evaluating those fund managers, those alternative investments to make sure they're getting the best deal for the purpose that they're looking for?
Yeah. So again, that's not something that I could spend my time on. If I was doing that, I wouldn't be able to go back to what we talked about earlier, spending a lot of time on the relationships with the families. So we have a team, an internal team that's evaluating those. So not every alternative that's available in the universe is available to us because they don't get through our vetting process. And then it's a matter of getting them through our vetting process. And then once they do, then we have the ability to evaluate those, which is a much shorter list, much shorter, and allow us to then utilize those as tools for the families that we serve. And, in certain instances, we will coordinate and involve our team and say, hey, this is the family, this is the profile, this is what they're looking to accomplish with this portion of their money. What would be the best alternative option out of our universe that would work in this situation? And they may give us one or two to think about and look at, and then ultimately we'll make that final decision on what to include in the portfolio. And then we also have, on occasion, we have certain opportunities that come to us that are limited to our firm, if you will, because of certain relationships. We just had, in 2023, we had an opportunity for a reinsurance fund that was really offered to us and us only. And if anybody knows what's going on in the property and casualty space, it's a little bit of disjointedness there in terms of disasters, fire, hurricane, water, things like that. That's causing a little bit of a dislocation in the property and casualty market, need for funds there, which creates opportunity for investors. So we had an opportunity like that for qualified purchasers last year. And, we expect to have a couple of those every so often as well that are very highly vetted that, again, for the right family, the right situation, could be a good fit.
So you guys, the same team that is doing the kind of macro Mondays, those 6 to 7 bullet points, they're also vetting alternatives, and maybe a huge funnel, 100 alts come through, maybe 5 of them pass. Those are the 5 that get presented to you. And then sometimes you'll have discussion with them. It'll be like, hey, this is what our client is looking for. Is there an alternative in our platform that makes sense? And that's where the collaboration piece comes back in, looping back into your core values.
Yeah. Again, listen, the markets and the environment, the world changes very quickly. So for us to stay on top of that, stay on top of people's lives, manage relationships, be there for the families that we serve when we need them, that's really the easiest way, is having this team that we've built and put into place really allows us to spend the lion's share of our time where we think it's most valuable and most important, which is with the families that we work with. And then when we need to get more information or dive a little bit deeper, then we bring in those professionals. That family that I mentioned to you earlier, where we took 5% of their assets and we're looking to allocate it to an alternative investment, we brought our team in. Basically, we booked an hour meeting with the family. I booked our team 15 minutes into that meeting because I talked to the family. Basically, we went through it, answered any questions, and then I brought them on just in case there were any other questions that they wanted to get a little more granular about, which we did, a couple of questions, because it may not be an area that I'm 100% familiar with. So I leverage that team to make sure that everybody's on the same page, and we're making these investments for the families that we serve, where in a way that everybody is on the same page and fully informed.
Yeah, no, that's awesome. I love the collaboration there. I love the focus on the families. Everything is optimized to prioritize that relationship. And I think that's really important and really cool, because when you're trusting somebody with so much, it's important that they're there when you need them.
Agreed.
So, yeah, I like that a lot. I do want to ask a bit more about that property and casualty opportunity that came your way. That is very unique. I haven't heard of it before, so I'm assuming a lot of the listeners haven't heard of it before either. Would you be willing to dive a bit more into that, or have you kind of said your piece on it, if you will?
I pretty much have said my piece. I became familiar with it late in the game. I had a family that was interested in it, and actually it turned out it was kind of late. But basically, it was a pool of assets that was going to be forming through a reinsurance fund. So it was going to basically backstop property and casualty, and they had some significant histories of doing this before, and there was some history of returns in that area that they were able to forecast in terms of based upon claims, et cetera. So we're kind of hoping that we have another bite at the apple in the coming year or two to maybe another iteration of that fund. But it was certainly a very interesting one, and one that we're looking forward to having the opportunity to potentially show to our families again soon.
And now, do you guys go to alts for these high net worth families specifically for the purpose of accumulation, like the higher return alts? Are you also looking at income alts? Is it a mixture of the two or something in between? Talk to us a little bit about the role they play in portfolios.
It's all of the above. It depends on what the need is for the particular family and what they're looking for. In the case that I outlined, they were looking for, more along the lines of accumulation, perhaps in a way that was going to accumulate hopefully faster than, the equity markets, but at the same time in a way that was not correlated with the equity market. So like the alt that we were showing them, the alternative strategy, I think in 2022, when markets were down significantly around double digits, this portfolio was up about 8.5%. So it showed some decent returns in a negative environment. And that's essentially what we want to show families, is something that's going to be different, that's not going to act in a similar fashion like everything else. And especially after 2022, I think, that was a good environment as a learning experience, that, just because equity markets go down doesn't mean bond markets are going to go up, or vice versa. Bond markets go down, that equity markets are going to go up. That's worked for a very long time, but it was an anomaly in 2022 that we saw both equities and bonds decline. Had we had more opportunities to be exposed to alternatives, and have uncorrelated assets to that type of environment, those people that did really benefited in that year in particular.
Yeah, that's something, we've experienced over at Stallion. People will come to us, they get a consistent 7 to 8% return through some real estate backed loans. But when the market is down, they really appreciate that uncorrelated asset. So I see the role that alts can play when it comes to that, whether it be on the accumulation side or the income side. It's really that not being correlated that helps optimize that diversification, if you will. Well, cool. I think I have really taken the time to understand where you guys come from in terms of portfolio allocation and equities, alts. I think I understand your portfolio construction well. And I do want to dive back to your firm, specifically how people can tell you guys apart from other financial advisors.
I think the biggest thing that separates us is, and you said it earlier, is joy. We're all about joy here. And that's really like our moniker is, what did you do today that brought you joy? And because at the end of the day, to what you said earlier, money is a tool, and it's a tool to hopefully bring you joy, whether it's now, later on. And I see that as a huge differentiator for us. because I think at the end of the day, a lot of folks, a lot of advisors, people in our profession are really just focused on the dollars and cents. And, in my view, that misses the mark. We have to be focused on joy because that's what people are looking for this money to do for them. So that's how we separate ourselves through that, what did you do today that brought you joy? And we have the, relationships and the service to back it up. There are so many firms out there, we have great service. Everybody does, everybody says that, everybody professes that. And reality is you're not going to know that until you've been working with any firm for any given period of time. But we bring joy to the table, and I think it's a uniqueness that we bring. And if you, look and learn about us as an organization, you'll learn, we're family first and joyful first firm by all means.
I love that. And specifically, if you guys are watching this on YouTube, Larry has Be Happy, pretty bold up in the background. I think also over there to my right, I think it's Larry's left, is what did you do today that brought you joy? I think that question is literally up on the wall right now. So yeah, that is amazing. I love that. Is it that simple question that allows you guys to prioritize joy, or are there other things that you guys do on a daily basis, weekly basis, or annual basis to make sure that you're really bringing joy to, your colleagues, to your families, and to everybody you interact with?
Yeah, I think it's just like our mantra. So it's, it's something that we live by. I have it printed on shirts, and I can't tell you how many times I walk through airports and I get stopped. People take photos of the saying. People ask what it's about. Great question. People's eyeballs, are dragged to it. And I think unfortunately in the environment that we're in right now, where everything is so divisive and there's so much, back and forth and having joy and thinking about things in a joyful life is really a great differentiator. And that's not why we did it, but it separates us from the pack because we're not getting involved in that divisiveness. We want to create joy in the families that we serve in their lives and allow them to live a more joyful life.
Absolutely. Well, last question for you here, Larry. What do you think is most important to the client-advisor relationship?
I think that there are a lot of factors that are important, but, I can speak from experience. I think that relationship is so key. I think transparency is key. If you don't know something, it's okay to say, listen, I don't know. I'm going to check with my team and get back to you, instead of just rattling it off an answer that's probably or possibly wrong. And if you make a mistake, owning it and fixing it. Unfortunately, I think a lot of the values that, like my mom had and my grandfather had and my wife's grandfather, who's the firm's named after my wife's grandfather and my mother, Linda, a lot of those values have dissipated and or disappeared completely. And I think to some degree, bringing those back is really what relationships need and really allows us to build, maintain, and keep those relationships for generations, because we're still operating with those, what I call quote unquote old school values.
I gotcha. Well, Larry, thanks so much for coming on the show.
Thank you so much, Timothy. I appreciate it greatly.
Of course. And if you guys are listening to this and you loved what Larry had to say and you want to find out more about him, Larry, would you be willing to tell them where they should go?
Yeah, so you can check out our website, mitlinfinancial.com, MITLIN financial.com. And if you're interested in the book, go to financialplanningmadepersonal.com. You could also download 2 free chapters of our book. Check it out. And if you're interested in it, you could then purchase the audio or the hard copy from there. But it'll give you a good idea of what we're about and what the book's about before you dive in there.
Well, guys, all that will be down in the show notes. Thank you so much for watching, and we will see you guys on the next one.